look at. Alex has done our homework. She knows exactly what, we're looking to see, what could come out and how we could potentially trade the banks and gold and silver as well.
All right, thanks, Guy. I really appreciate it. Yeah, so today is basically Fed D-Day, policy decision coming at 12:30. No change is expected, but what we're really watching is Ben Bernanke's first ever press conference at 2:15. That's going to be the real game changer. It's going to be the battle versus, inflation versus growth. So here's what to look for. Signs of inflation, are they hotter than expected? Any indication of when the Fed might raise rates? Hints on loose money exit strategy. Will it be a hard out in June when the $600 billion bond buying program runs out? Or will the Fed keep its balance sheet as is and reinvest that profit, just not print any more money? In terms of what to watch, I'm going to be watching the dollar, gold, and silver. I have some really cool stats for you here. During the first quantitative easing round one, which was November 2008 to March 2010, the U.S. dollar index fell 5.11%. Gold rallied 38.41%, and silver popped almost 60%. In the time between QE1 and QE2, when there was no, quote, loose money in the market, the U.S. dollar index still fell almost 5%. Gold rallied 21.51%, and silver popped 50%. Now, although QE2 was hinted at in mid-August, it was officially announced November 3rd, 2010, during which time from then until the present, the U.S. dollar index has fallen 3.46%, gold is up about 10%, and silver has exploded 82%. Now, gold and the U.S. dollar are only inversely correlated, say, about 32% of the time, and experts that I talk to say that some of the metals rally we've been seeing is dollar-related, but the rest of it is really speculation. Okay, fine, I'll concede that, but today's mover for gold and silver will really be the dollar and will really be the Fed. The U.S. dollar index is currently at an 18-month low, and according to J.P. Morgan, the FX, 18-year low, I think, and according to J.P. Morgan, the FX is the only market where volumes are rising, which means you have to wonder, though, about the risk of a reversal. So, what does this mean for gold and silver? In my opinion, most likely from traders I talk to, they are expecting some kind of knee-jerk reaction, sell-off in the metals, and the dollar might see some short covering and might trade higher on the Fed's announcement, which will hurt the metals. And gold and silver, remember, are still pretty much oversold, especially silver. But if the Fed stays neutral and continues some kind of accommodative policy, that will push the metals higher. And if you're scared of rising interest rates, I got to tell you, the Fed would have to raise interest rates more than 1% to turn real interest rates positive, and even the hawkish European Central Bank wouldn't even take that kind of step. And we will get to your Fed trades and the rest of your hump